Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis. Today is Tuesday, December 23, 2014. Light volume trading day. Not a lot of action going on. Tomorrow's half a day. I don't think there's going to be a video unless we need one, unless something really important happens tomorrow and Friday. This may be the last one of the week with the Christmas holiday. Merry Christmas to everybody out there. Happy Hanukkah to everybody out there. But I think unless something is important enough to throw a video up there, I think this may be the last one of the week. And really, there's not much to talk about today. So we'll just run through the normal stuff and then we'll go about our business. The SPY was only up 28 cents. This is a daily chart. The Dow was up about 65 points today, and really the only reason for that was so they can jam the Dow over 18,000, and that's good for the 6 o'clock news. Dow hits 18,000, everybody gets all happy. The Dow's going to go now to 19,000 and 20,000, and that's what they'll tell you. So that's the reason the Dow is up more, but reality is, folks, the Dow is 30 stocks, and it doesn't mean much. We look at the S&P, we look at the small cap index, the IWM, and we look at all the other stuff we look at. That's important. The Dow's not important. We don't really care about, we care about the stocks in the Dow, but we don't care about the index because it's a price-weighted index and it really has no bearing on what we do. So the Dow's over 18,000. That's fine. Have a nice day. We don't care about that. The S&P was up only about 3.5 points today. The SPY translates to about 28 cents. NASDAQ was down slightly today by 16 points. And what you're seeing now is you're just seeing the holiday grind. You're seeing positions squared up. You're seeing some what they call window dressing for mutual funds. They're squaring positions. They're buying stuff they want to show that they have into the end of the year, into the end of the quarter. They're shedding stuff that they don't want to show that they had because you can only really see what they had at the end of the quarter. And that's really what goes on at this time of the year. Not a lot of selling pressure like I've been telling you unless something catastrophic happens. And that would be what we define as a black swan, something you really can't see coming. And there's going to be a correction coming in a few weeks, but we'll talk about that once we get closer. It's really not going to happen until sometime in January, but not the first week of January. That's typically not when you'll see it. And that's really about it. So the IWM that we like to look at, let's take a look. The IWM is, there you have it. The IWM put in a small day today. It was up 14 cents. That's really nothing. So you see what's happening now is there's really not a lot of volume. There's not a lot of conviction buying or no conviction buying. There's no conviction selling. This is just back and forth, grinding up. Sure, you have some stocks that are up large and some stocks that are down large. In fact, the biotech index took a nice hit today. But all in all, there's not a lot going on. And, Google was up nicely today a little bit. Apple was down a little bit. Facebook was down a little bit. Yahoo was down. Alibaba was down. But all in all, you didn't have nothing one way or the other that we can really discuss as something of importance. Some of the stocks that we've got in our portfolio for the subscribers were up today. That was nice. Boeing was up $2 today. We've got that one. Microsoft was up today. We've got that one. So we're doing fine, and but there's not a lot else going on. We can move over and we can just talk about oil real quick, and then we'll talk about gold. Take a look at the USO. That's the OSO. We don't want that. We want USO. And the USO, or oil, was really not much happening today. The crude oil was slightly up a little bit, but really you still haven't put in that low we're looking for. And I know I sound like a broken record, but if we break this low here, which translates on the crude futures contract to, I think the number was 53.60 was the low that we had a week or so ago. If we break that low, which is this low here, you can anticipate that we're going to go down to $50, and my number that I've calculated is $48. So if we break the 53.60 level, you can look for 48, and from that point, we'll see what happens. And if we start to get there, I'll give you new numbers if I get new numbers. But right now, my bottom line would be 48. But, lower is not out of the question. It's just I don't calculate anything lower at this point. And that's really all we have in oil. But some of the energy sector stocks were up today, which was nice for those that own those. So, but nothing big. In fact, the if you look at some of the big integrateds like Exxon had a decent day today, and but you're going to come up to some heavy chart resistance up in this area here. So I wouldn't look for Exxon to get much above this area if we can even get up there. Let's take a look and see what we had with Chevron. Chevron had a nice update today. Same thing. You'll probably get up into this area. A lot of resistance. You see how you chopped around here for a long time. That's going to provide a lot of chart resistance, but it's still a little ways up from where we are. So there may be some more upside. And the other big one is ConocoPhillips. Same routine. They're all about the same. So they've had a nice move off the bottom, but they're going to start stalling out pretty soon. One more big one that I like to look at is Occidental Petroleum, Oxy, and that one also maybe get up to this gap fill area at 86, but that's about it. And that's about it for the energy sector. So let's move on to gold, and then we're going to wrap it tonight because we'll let you go, and then we'll let you have a nice Christmas holiday, and we'll probably show up again next Monday. Unless something important happens, then I'll certainly put out a video. So gold, more of the same today. Not much going on. The GLD was up 19 cents, which is really nothing. But as I've been telling you, now's the time to begin accumulating gold if you haven't already owned it, because we're going to look for gold to start in earnest higher in 2015. And we're gonna first look for this area here that we will revisit this top here at 118, and then we'll start to get up to the 120 and a half area. Then we'll challenge the 200 period moving average, up to the gap window, up to the gap fill, and so on. But one step at a time, and it's not going to go in a straight line. And like I've been saying, gold is a volatile market, so you're going to expect big moves up and big moves down, like we've seen. Big up move here, big down move here. You're going to see a lot of that stuff. But gold is something to accumulate now. Nobody wants to own gold. Nobody talks about gold. That's the time you want to start accumulating it, not when it's in the news every day. You want to have it before it starts making the news every day. And my work tells me gold is going to move higher into 2015 for all the reasons that we've been talking about for weeks and weeks and weeks, which is the central banks printing money. You have the ECB that's going to start printing money in earnest. You have the Japanese central bank, the Bank of Japan printing money right now, and that's going to continue, and it's only going to get more and more. They're going to fight deflation all they can, and that means money printing, and that means that gold will inflate with the stock market. Of course, there'll be corrections along the way, just like there'll be corrections in the stock market along the way. And when we start to get closer to a correction in the stock market, I'm certainly going to let you know. And we're going to have the members play on the short side. But right now, the members are on the long side, and they're enjoying the picks that we had on the long side, letting the market inflate towards the end of the year rally, like we said would happen. And that's about it. So I think that's a wrap for tonight. Hope everybody has a Merry Christmas, a Happy Hanukkah, and we'll see you, unless something happens, we'll probably see you on Monday. And thanks for tuning in, folks. I'm David Frost. This was another episode of Common Sense Market Analysis.